Are you thinking about buying or selling a home in Florida? Whether you're considering your first home, relocating, downsizing, upsizing, moving out, moving on, or planning to acquire an income-producing property as an investment, Team ROC of Residential Movement Group is your real ownership connection. They are Florida Realtors Joanne Beepot, David Ham, and Ellen Marie Jean-Baptiste. For rock-solid professionalism and expertise in all aspects of real estate transactions, lean on Team ROC to help you accomplish all of your real estate goals. Contact Team ROC at 904-385-9169, offering you service in English, Spanish, Portuguese, French, and Haitian Creole at 904-385-9169. Also listen to Team ROC here on the ROC Real Estate Radio Show every Saturday morning from 10 to 11 a.m.
Everything discussed on air in this broadcast is for general information purposes only. For particular help with your real estate needs, contact our team of realtors for a complete individual consultation concerning your specific concerns. Furthermore, team members are realtors, not practicing lawyers or CPAs. Nothing discussed by anyone on the show shall be considered legal advice or tax advice.
Hello! What's up, everybody? This is Ellen Marie Jean-Baptiste. I am coming to you guys from Residential Movement Real Estate Group, and then this is Team ROC, the team that gets you to the closing table. And then again, our phone number is 904-385-9169. Again, 904-385-9169. Today, we do have a wonderful show, but let me introduce my people first before we go. We do have Mr. David Ham with us today. Again,
hello, everybody. Welcome to the Real Ownership Connection. That's us, Team ROC. Thank you for being here. We have an excellent show for you today, so keep listening.
Yes, and then also we have our guest, Miss Sophia Davis Wallace. Oh my God, I'm mixing that up.
That was right, David, wasn't it?
Yeah, that's right. Oh my God, I got it first.
Congratulations, first time.
Guys, I keep mixing her name, Wallace Davis Wallace, but today I got it right. So we have Sophia with us. She's one of our preferred lender. She's coming to you guys from Guild Mortgage. Let her introduce herself. So, because I'm not doing her justice.
Good morning, everybody. Finally, she got my name right. Sometimes it's Sophia Davis Wallace. Sometimes it's Sophia Wallace Davis. And then I don't know what else it will be, right? But I am Sophia Davis Wallace, and I am with Guild Mortgage. I'm originally from Jamaica. So hello to, welcome and hello to all my Jamaica man folks, right? Okay, so I'm with Guild Mortgage. Been there, a few years. And just a little bit about myself, other than I originated from Jamaica, the island, the land of the milk and the honey. Is that really? What it is? I don't know. It's something.
I thought it was
Roman water or something.
Bird? Is it the minor bird that's the symbol of Jamaica, the bird of Jamaica?
Okay, we're not talking about today. We're talking about mortgage. But anyway, guys, I'm going to revoke her Jamaican card because she doesn't even know what is the slogan for Jamaican. So we're going to remove that. So
how about the land of the ackee and the saltfish?
Oh, that's better.
All right.
Give me something today. So anyway, today we are going to talk about, guys, all of the first-time home buyer program they have available, what's going on, how can you be qualified for first-time home buyer. Today is Sophia. Sophia is one of my preferred lenders. The reason I like working with Sophia because Sophia is like me. She put the accent on the ease. If you're from a different place, you know what that means. So when she's doing a loan for me, she go from the beginning until the end. She contact my buyers. And then guess what? For my Haitian people talking right now, I got great news for you. Her loan processor is Haitian. I don't have to do the double job now. So, like you know, guys, we have a bunch of multilingual people in the table. Myself, I speak 3. David speak about 1 million of them.
That's
So-
a bit of an exaggeration, but okay.
Sophia said I speak two. I speak patois in English. So we're going to be talking today about the first time home buyer program. So I'm going to let Sophia tell me a little bit about what is the first time home buyer program.
Okay, awesome. So just to kind of backtrack though, to let you know a little bit more about me and my background. So I have been in the mortgage industry for over 10 years. I've been doing first time home buyers and down payment assistance program coming up 5 years. So I am very knowledgeable about a lot of the programs. I can answer a lot of your questions. I can help point you in the right direction and just get you to the closing table with the ROC
But
team.
what's your phone number so they can call you? Because we have our audience listening right now. But if they have question, guys, write down her number so you can call her to ask all of the question you may have. Because right now you're listening, you may not know what question, but write down her number. Sophia, what's your number for people to give you a call?
It's 904-993-9895. That's 904-993-9895.
And our
Are
number
there any
here.
other ways to contact you besides the phone?
That's the best way unless you are ready to apply for a mortgage. Then go to applywithsophia.com. That's applywithsophia.com, and that's a PH. Okay?
Okay,
Sophia
Sophia with a PH.
If you're
Yeah.
ready.
If you're ready.
And our team number is going to be 904, guys, 385-9169. At that time, you're going to reach myself, Ella Marie Jean Baptiste. You're going to reach David Ham. And then also Joanne Beepot, who's not here with us today because she has some prior engagement. So, but she will be with us next Saturday, so to can get the bus rolling. Is that the way they said it? The
Ball.
train,
We
the
usually
ball
say the
rolling,
ball
the train
rolling.
going, whatever it is. Hey,
Whatever
English
it's
is
going to
not
roll, we're going to roll it.
English is not my first language. I'm trying, please. I'm
No
trying.
excuses. That's what Joanne was saying. She was here. No excuses.
Okay,
Just
Joanne, you
give
know
it.
your name is
All right.
being mentioned. So
Okay, so let's talk about down payment assistance program because I know there are a lot of listeners out there that wants to get the lowdown on what it is. So there are a number of down payment assistance programs that are available for you as a first-time home buyer. And those are either your Florida bond program that requires starting from a 640 credit score. And then there is the FHA Zero, which is another program that Gil offers. So at Gil Mortgage, we do all your FHA, VA, USDA loans. We do your conventional, both Fannie and Freddie Mac programs. So we do have a wide spectrum of program for you to choose from. And then when it comes to the down payment assistance program, there are actually a ton of options that are out there. So the minimum amount that you're looking at in terms of the Florida bond program is $7,500. It is a 0% loan. It's deferred, so there's no payments that is required, right? And then, of course, we have a $10,000 option, which is a loan that you're paying back over 15 years. Interest rate is super low on that. And then we have like a 3 and a 4% options. So there are a couple of options that are available to choose from. And the option that is going to best fit your needs is going to be based on your own personal situation. So it's not one size fit all. It's going to be tailor made for your specific needs.
I agree with that. It's not a one size fit all. We're going to ask Sophia questions and then question we think that our listener will have. And then if you got additional questions you may ask, call her. She'll be more than happy to answer those questions for you. Let's ask you one question, Sophia. What makes somebody a first-time home buyer?
All right. So to be classified as a first-time home buyer, it means that you have not owned a primary home in the last 3 years. So if you haven't owned a home in the last 3 years, a primary home, you are a first-time home buyer. If, let's say, you own an investment property, something you're renting out, you're renting that property out, you're collecting rent, it's on your tax returns, that is, it's an investment property. You are still a first-time home buyer for purposes of this program. So don't feel that because you have own a home or you currently own a home that you don't qualify as a first-time home buyer. You're still eligible for the program.
But the home has to be an investment property for them to be qualified for that, right?
Absolutely. It's an investment property. As long as you haven't lived in that home in the last 3 years, you're classified as a first-time home buyer. That is correct.
In addition to the classification as a first-time home buyer, the participant in a program would also have to meet income qualifications as far as the maximum and minimum income. Is that correct?
That is absolutely correct, and thanks for bringing that up. So with the down payment assistance program, there are income restrictions. Because remember, these programs are designed for low to moderate income earners. And so some program is going to look at the household income, that is everyone 18 and older who lives in that home or who's going to be living in the home. Other programs just look at the income of the person who's on the application only. So remember, earlier I said it's not one size fit all. It depends on your situation. We're going to find the best program that's going to fit your specific needs.
Again, each county got their maximum, right, about a house they can buy. So, what is the maximum they can buy with the first-time home buyer or down payment assistance?
All right. Once again, depending on the program, those limits are going to vary. And I don't have a list of, what the maximum is, let's say for Clay or Duval or Putnam or wherever the buyer is right now. But that's something we'll look at. So we'll look at what the purchase price limit is, what the income limit is, how many people are in the household. And once again, if it's a program where, let's say if your income exceeds one of the program limit, then let us look at other options.
Different programs.
Yeah, like for example, I just had a borrower, and these programs are available for veterans. So all my veterans out there, you can take advantage of these down payment assistance program. And the ROC team will let you know that right now we're in a very competitive market where sellers are not sometimes willing to assist with closing costs. So if you're as a veteran, you're getting 100% financing, you can go in with a strong offer because now you don't need to.
You don't need the down payment. You don't need the closing cost.
Right. But just to come back to the story I was about to tell. So I had one veteran we're looking to close on in another week, and his income was in excess of $90,000. And the program limit on the program that I was looking at was right at 90. But there was a second option that I could have jumped to that, could take his income to 105. So we were still able to just continue with the loan process. He's still going to get the same amount of money and everything is just going to be fine. So once again, it just depends on your situation.
And then that's the reason why we really like working with Sophia, because when we send her a client, a customer, she already knows in her head. You can call her at 2:00 in the morning, say, hey, I got a customer for you. I mean, my 2:00, not your 2:00. So she knows what that means. So, yeah, seriously, you can call her in the middle of the night. She's sleeping. You said, Sophia, I have a customer for you. And then give her the scenario. In her head, she already knows what exactly what program that person can be before she even talk to you. She presenting those programs to you. She is very knowledgeable in what she's doing. I will enjoy working with her. So give her a shout out, guys, because believe me, you're not going to be disappointed. David, do you have any questions? So I have a plenty question for her. Go ahead.
Well,
I can take the whole day for me.
Continuing along those lines, so we've already described the classification, we've described the income qualification, and now also the property. There are also issues regarding the purchase price and what property can be purchased if you're using a first-time home buyer program.
So you can purchase any properties. You can purchase a condo. You could do a single-family home. You could do a townhome, right? So there's no restriction, really. I think some programs does have some restrictions on manufactured home, But that is something, once again, I can check on because I don't have all my guidelines with me. And guidelines change from time to time. So it's always good to go back and just make sure
What is
that
a
it's going to be.
manufactured home? Because I want my listeners to know what is that, because I don't want them to be like, is a new home, whatever you call. What do we call manufactured home?
Okay, so a manufactured home is what other people also refer to as a mobile home. So it's necessarily not built on site. It's then transported and affixed. So those are what we classified mostly as manufactured homes.
So is those programs are available for people who want to buy fixer upper? Like, for example, if they find a house they like, but the house is not ready to move in, can they use that same assistance to buy those homes?
All right, so the answer to that question is no. So, excuse me. So, on the down payment assistance program, a renovation, because what we're talking about
It's
now
renovation
is
loan.
a renovation loan. That's a totally different loan program. I don't offer that program, so
You don't know anything about it.
I don't know anything about it.
But if you want to use the down payment assistance, bottom line, the house you want has to be moving ready.
Moving ready. Absolutely. Absolutely.
David?
Okay, and so along the lines of where you were discussing the manufactured home, I want to also draw one more distinction. Sometimes we encounter the off-grade construction, where sometimes that may be an issue for some. Is that an issue in any of these programs if the construction's off-grade construction but still not a manufactured home, but where it has it's built the bricks and then it's up a layer or
no. As long as it's not a manufactured home, you're pretty much good to go. But just to come back to with regards to the down payment assistance program, other than the Florida bond, because I know I mentioned one type, we at Gale also do have what we call a FHA 0. Right, it's a FHA 0. So typically in an FHA loan, your minimum down payment is 3.5%. And what this program will do is actually provide the 3.5% that you need for the down payment. Credit score on that program is 640. That's the minimum credit score that is required. And this program is actually a grant. And what happens is once you have the loan, we just need you to make 36 on-time payment. 36 on-time payment, and that 3.5% is gone, disappear, vanish. So that is also a really, really awesome program.
Let me see. 36 is 3 years, right?
3 years.
You have to make your mortgage payment on time for 3 years.
3 years. Very,
People like
very
me who
important.
doesn't do math. Give me the number, 3 years. Don't give me 36 months. But okay. So it's 3 years to make your payment on time for that loan, which is the 3.5% you're supposed to pay as your down payment to disappear.
Yes, and I know the next question is, well, what happened if I was late, like while I was in my 24-month? Guess what? The clock restarts. The clock is going to restart because the program says 3 years of on-time payment. So we really need you to get into that program. Make your payments on time, get rid of that 3.5% and don't have to worry about it.
So that 3 years can be 6 years. It can be 10 years, depending on you.
It can be 25 years.
It can be the whole 30 years.
It can be the whole 30 years.
Yes, whenever they occur.
3 continuous years of on-time payment. Now, I know because I was once a first-time home buyer that one of the biggest challenge that we have as first-time home buyers is coming up with the money. And this is why we're bringing this program to you today and the information to let you know that there are options out there that are available. And we just need you to call and take advantage of these options because down payment and closing costs is like the number one barrier to most people purchasing a home. So we have the answers and the help for you to just be able to get into the
I like to
your
give
home.
people a scenario. I don't know, maybe if I'm wrong in the scenario, you just cut me off because I am not a loan officer. I'm gonna stay in my lane. Let's say that I'm giving you guys a scenario. If you're qualified for the 100% FHA loan, that's how you call it. So let's say that you qualify for 100%, and then us as a Team ROC, you find a house. And then the house is $200,000. We ask the seller to pay, let's say that's $6,000 toward your closing costs. In reality, really nothing to bring, most likely not that much money to bring to the closing table, because not only you qualify for 100% finance, but now the seller is paying $6,000 toward your closing costs, and then really it's gonna cost you less for to buy than rent, because when you're renting, you have to pay the first and last and security. That can be thousands of dollars. Contrary to buy, you may not have to bring all that to the table. So my advice to you guys, take advantage of all of those programs she has, and then get you on the road for your home ownership.
Let me ask one more thing related to qualification. And so you're qualifying the buyer for the first-time home buyer program. They would also need to meet the debt-to-income ratio requirements of the program. Is that correct? Can you tell us what those are?
That is an excellent question, because I see it happen all the time. So with the down payment assistance programs, not only are there income limit and purchase price limit, there is debt to income limit.
What is it, debt to income, which for my new listener? What is that?
Of course. So your debt to income, and these are excellent questions that these guys are asking. So your debt to income is how much money do you make? How much money do you make? Let's say that is $2,000 a month. I'm just throwing a number out there. How much debt do I have? And when we're talking about debt, we're talking about your car loans, your student loans, your credit cards. Those are the items that we're looking at. We're not looking at your cell phone and your car insurance and your cable and your light. That's not what we're counting. We're only counting those items that are on the credit report. So now we look at how much is your monthly payment. So when I talk to someone and I ask them about, like, what kind of debt you have, they say, well, I owe $1,000 on this card and $500 on that card. We're not counting that $1,000 or $500. We're counting the minimum payment that is required. And a lot of times that's $25, $30, $50. Those are the items that we're actually adding up. And then now we're going to look at what your mortgage payment is going to be, including the principal and interest, taxes and insurance, and if there's a HOA fee associated with that. Mm-hmm. So we're adding all of that up, and we are calculating that against your income, which is what's going to give us your debt to income ratio. So if you have $2,000, for example, and then by the time I add up what the new mortgage payment will be and your taxes and all of that, and let's say that's $1,000. So now your debt to income ratio is 50% in that situation. Some of the programs have debt to income ratio limit and restrictions. It could be 45%, maximum is 50%. So either you cannot exceed 45%, and that depends on your credit score and the program, or it could be 50%. 50% is always the max. So a lot of times, and I have this situation even with David and Ella, where the customer debt to income ratio is exceeding the 50%, now we cannot use down payment assistance program. Mm-hmm. Because if you want to purchase more than where your debt ratio is at that 50% cap, now you're going to need your own down payment in order to be able to exceed that. Mm-hmm.
Usually, and so the purchase price also comes into play. Right?
Absolutely. So the purchase price is definitely going to come into play. More and more, I see buyers, as I pre-qual them for one amount, they go out, they find a property that is over and above the pre-approval, what they're pre-approved for, right, in order to fit into the program. So now, if that's the situation, we're going to come back to the scenario where they're going to have to bring their own down payment. And we have a situation, David and I, right now, which is exactly the same thing. So if we want to capitalize on the down payment, then we have to purchase within the purchase price limit that is going to keep our ratios where they need to be.
Exactly. So
there's a lot to consider, lots of factors.
So it's a lot of information, guys, she's giving us.
But you guys tell me, right? Of course. Because what are you seeing out there? Like, I know I send you guys pre-approval, you go out. What is happening out there in the market?
Oh, let me tell you. So the resale market in particular was where we called the existing houses They're being resold. There's so much less inventory. So there's far fewer houses being sold now. And so, when we look at the Northeast Florida, where we are here currently, there's a little over 5,000 homes when you put that in. Pre-COVID, it was like 15,000. So we're looking at about a third of the inventory. And so that means it's really a seller's market, and that gives the seller a good deal of freedom in terms of, what offers are they going to accept. I see plenty of sellers taking multiple offers, whereas that you just take and negotiate one. Instead, no, they're saying we're going to wait until such a date, see how many offers come in, and then we'll negotiate the highest and best one. And so
I see people buying house more than what the asking price is, because that's what it is. So right now, to be honest with you, the market is very hot for people to buy. So it's a time to buy, because not only the interest rate is low, but also the market is the way now to go. So you cannot go wrong with it. So let me ask you one question when we're going back to the first-time home buyer program, also called as down payment assistant. Let's say that a scenario. Let's say that I have a house. I bought a house 5 years ago, and then I sold it, and I don't have that house anymore for 4 years. Am I qualified for that down payment assistance you're talking about?
Absolutely, because you haven't owned a home in the last 3 years.
It has to be 3 years not having a title under my name, right?
Right. However, on the FHA 0, which is the 100% financing, you could have owned the home last week and you sold it. Or you could even own the home now, but you're going to rent it or even rent it out.
Okay.
You could still use that program. Definitely could still use that program. But just to piggyback on what David and Ella mentioned about inventory in the market, this is the reason why down payment assistance is so important, right? Because the market is competitive. Sellers are not wanting to give up too much of their equity to assist in closing costs. So if you have the down payment, that just puts you in a way better spot. So whatever money you have saved that you were putting aside to purchase this home, now you can use that to offset your closing costs. So it's extremely important to take advantage of these down payment programs.
So we call the saving of money, we call that reserve, and the real estate market. We said you need to have reserve, and then that's what it is. So let me ask you a question. So Min, you say something about you can be qualified for 100% finance FHA if I had a home. So that one is different from the bond program.
Yes.
The bond program, you have to be 3 years with no title under your name. However, for the 100% FHA, you can still have a home under your name, but as long as that home, either you're going to sell it or you're going to rent it, right?
Absolutely.
So that's, again, now, guys. So again, that's not a reason for you not to purchase your dream home, because now you can still be qualified for another FHA with 100% finance. And let me ask you a question. Let's say that we decided to rent that home. I have a home. I decided to rent it. Is that rental will be counting as income for me? What's going to happen?
Okay, so I would imagine you have a home, you still have a mortgage on that, right? So the rental income is going to help to offset your mortgage payment and keep your debt to income low.
Okay.
So that's the beauty of that.
That's good. Again, guys, you see? So today is the question that we have. Let's say that, another question. Let's say that I have a house and I rent it. I don't have that home anymore. But now I want to buy a home. And then I'm not qualified for none of your program. For whatever reason, I'm not qualified for that program. Can I still buy my, not qualified? Let me rephrase that question. Let's say that I have a house, I put it in the market, I rent it. And then now I want to buy my home. What program, let's say that I'm not qualified for the down payment assistance. What other program do you have that I can be qualified? Conventional, do you have a conventional 100%? Do you have another, what other program I can be qualified for if I'm not qualified for the bond program?
For the bond program, so you could qualify for the FHA 0, right? Because remember, we can always still get 100% financing on that. We could qualify for a conventional loan, or just another FHA loan with you coming up with your own 3.5% down payment. So the fact that you are not in the market for, or you don't qualify for a Florida bond, or you don't qualify for FHA 100% financing, you could still qualify for just a FHA loan or a conventional loan, provided that you do have the strong enough credit, the credit profile.
What is the credit score for a conventional loan?
Minimum 620.
Wow.
620. Now, I should also say on a FHA without any kind of down payment assistance, we'll go to a 600, as low as 600. So for those listeners out there who are not at a 640, they do have money, they can put the down payment. All we need is a 600 to get you going.
So again, guys.
Talking about the money that people might have available to help them buy the house, and yes, it does take money to buy a house. Are there any issues concerning where that money comes from, how it's shown, how it's reflected? Can you talk about that for a bit?
Oh my gosh, yes. Excellent question.
Mattress.
I get it every day. This mattress money thing is not going to work. It's not going to work. So any funds that you're using, especially with FHA financing, any funds that you're using in that transaction, the lender must source those funds. Must source those funds. So a lot of times I have buyers tell me, I have $2,000. I've just been stocking it away every time I get paid. We're not going to be able to use it, folks. So if you have money right now, please go put it in the bank. Right? We have to put it in the bank.
That I have a customer of mine who told me that was so funny. I said, we cannot use mattress money. She said, oh, no, I didn't put it on the mattress. I put it in the safe. It's the same thing.
Same difference, right? Same difference.
Regardless of the way where you put the money, under the mattress, on the safe, and the freezer, as long as it's not in the bank, we cannot use that money.
Yes.
So that money has to be counted. The blender has to know where the money is coming from. Imagine you are getting a loan from somebody for thousands of dollars. The person want to know, how am I going to get paid? So how are you going to pay the mortgage, the loan back? So that's the reason why, guys, we are in your business. We need to know. So
yes,
our license is on the line. So we need to know those information. Go ahead. I'm sorry.
No, you're fine. But yes, it is extremely important. As I said, all the money that is going to go towards purchasing that home, we need to be able to source it. So a lot of times too, you have people getting gifts, right? Oh, I'm going to get a gift from my mom or my dad or brother, sister, whoever. FHA loan, we're going to need to source the funds. Remember, I said that earlier. So if your dad is giving you $5,000 and he gives you a check, we're going to need to get your dad's bank account.
You know where the money is coming from.
To show that he had the money before and that the money came out of his account. And then, people get upset about it. Like, why you got to show this? Why this? Why that? Why that? You're asking the lender to give you $200,000, $150,000, whatever it is. The lender have an obligation to the government to follow the rules that are set by the government. And so we have to be able to trace those funds. So don't ask somebody to give you a gift if they're not willing to provide the bank statement. It's as simple as that. Unconventional loans is a little bit different. We don't need to get the bank statement for the person who is given the funds. We will need a gift letter. Either way, that needs to be fully executed, that it is a gift. It's not a loan. It is a gift. So just make sure that we stay within the guidelines of the laws and that we're not committing any kind of mortgage fraud or anything.
It's not us who's trying to make it hard on you guys. It is the same way we have to give explanation to the government, because guess what? Our license is on the line. That's how we put food on our table. So therefore, we need to get those information.
You mentioned the government regulation, but then there's also the purpose behind that government regulation, and that the investors investing in these loans also have to be protected. So you're protecting the investors. Is that right?
Well, what happened is when all lender pretty much does a loan, we follow the investor guidelines, because at the end of the day, we're selling these loans to the investors. And so if we don't follow their guidelines, guess what? They're not going to take the loan from us. So in the same way that we're asking you for documents, once we get the loan to them, they're asking for all these documents too, right? And so we just got to make sure that we are crossing all our T's and dotting all our I's.
There's rules and regulation. That's what
yeah.
it to be. Let me ask you another question now. Okay, for people, what is the difference between the FHA loan and the conventional loan? So can you give us a difference between those two?
Yeah. All right. So for starters, on the FHA
and the VA loan, what is it? Those three, what they are? Because we hear people talk about those loans all the time. Oh, I'm qualified for VA. I'm qualified for conventional. I'm qualified for FHA. Tell us what is the difference between those three.
Sure. So outside of the credit score, which on the FHA you need at least a 600, VA is a 600, conventional you need a minimum of 620. FHA is just a government loan. It's insured by a HUD. So the guidelines, the credit guidelines are a little bit less stringent. So you could have, a couple of medical charge-off collection, and you could still be approved for that loan. With the conventional loan, the credit score is higher, and the risk profile is a little bit more rigid. So it's a little bit more difficult to get approved on a conventional loan. When it comes to a VA loan, for you to qualify for a VA loan, you got to be a veteran. Whether you're active duty or you are a veteran, you're retired, you were in the national, you got to be honorable discharge.
I was going to say,
doubt about that.
honorable discharge. You have to be honorable discharge.
Yes, have to. Or if you were in the National Guard, any branch of the military is what's going to, Coast Guard, all branches is what's going to entitle you to a VA loan. And of course, we do offer USDA for those people who are trying to purchase in like the rural area. As long as it's classified
as a rural,
then you'll be able to get a VA loan, and not a VA, but a USDA
loan.
And that's 100% financing, just so you know.
What is the credit score? Is 600, why?
600 as well. The USDA guidelines, though, sometimes tend to be a little bit rigid in terms of if you have recent collections and charge off or late and things like that. So here's what I want to say. The first thing you want to do as a home buyer, if you're thinking about buying, is let's start checking your credit. You could start doing your own check. There's free annual credit report that we're all entitled to once a year. Take those reports, kind of look at it, see what's out there, and just make sure that, moving forward before you start applying for the loan, that you are paying down your accounts, right? Because we know some of the matrix that makes up your credit score, and one of them is utilization. So we definitely want to keep our balances low so we can, have a good, strong score. So when you get ready to apply for a mortgage, you're going to be in a much better situation to get an approval.
Awesome. Those are very good information. I'm telling you, she's a tough cookie. She knows her stuff.
Yes.
Go ahead.
I do. And when I get your application, believe me, I'm slicing and dicing it just to get you approved and to get you what you want. And, we're going to have situations where you're not quite there, but we're going to help point you. I'm going to help point you in the right direction, right? So I'll give you little tips that you need to do. And all it needs, guys, is just a little bit of discipline.
Exactly, discipline. We call that a financial diet. That's the way we call it ourselves, because there is nothing. Everybody know what a diet is. You want to eat the thing. Guess what? When you're on a diet, that's when all of the nice, good food coming around you. It's the same thing as your financial diet. When you are really on a financial diet, that's what everything need to happen. So I tell people, if you don't need it, don't buy it.
Absolutely. In fact, I have, we were talking about debt to income and the down payment assistance. I had pre-approved a young lady. She been looking and looking. She couldn't find anything, that would keep her ratios right at 50. She qualified for 50%. And she finally went on a contract with a townhouse. She loved this townhouse. She really wants it. She's a single mom. It's just her and her daughter. And now the ratios are over 50, so now she have to come with her own down payment, as I mentioned before. So her mom is gifting her the money, so we're sourcing all those funds. And she needs a little bit more money too, so she's really, really nervous because she's trying to figure out, am I going to have enough money to close? And I told her, I said, you have 45 days because that's the time from the time she started signed the contract to when we're closing on the home. I said, from this day forward, I don't need you doing no nails, no eating out,
That's
no
$75.
going to get no hair
Right.
done. So she said, okay, that means she's going to have to eat, what is it? The
Ramen.
ramen.
No,
No,
it's not ramen.
yeah,
If you
she
have
said that's
to
what
eat
she and her
ramen
daughter is
noodle-
going to have to do. I said, no, your daughter is going to eat what she's going to eat, but you're going to eat them noodles because I need you to save every dime you have to make this happen.
I
And
tell
so,
people it's
yep.
temporary. I
It
say
is
that to
temporary.
them all the time. If we put you on a financial diet, let's say that we put the minimum is 45 days, the maximum can be a year. If we put you on a financial diet, it's not because we want you to be, we want you to have that home as much as us too. Because the best thing is when we put that key in your hand. We like to see your smile, especially when you didn't think that can happen. I tell people that those things will pass. A very nice Coach bag, guess what? The moment you purchase it, is gone.
Well, it
Coach
might start
You know?
temporary for some people, but for others, they might discover that, hey, this is actually the better way of living.
Exactly. And then some people do that. They find out, oh my God, that's a better way of living. So I like that way. A $200 or $300 sneakers is not worth a key in your hand.
No, it's not that serious.
It's not that serious because guess what? You walk exactly in the same way as me wearing a Payless, and they don't have Payless anymore. But anyway,
So, like, if Joanne were here, she would say exactly what you're saying. And I remember her saying all the time is to start saving your money now. If you're thinking about buying a house, start saving your money now. I wanted to ask you about changing course. Like, so let's say that you started off a transaction with one type of financing in mind, and then later you discover that something else might be available and helpful, before you get to the closing table and you discover this and it's in time. What happens in that situation, or what?
We just changed course.
Just do it.
Yep. I have a veteran. She's closing too this month, and I put her into the program because the Florida Band have a program called Salute Our Soldier, which is a special program for the veterans, and her debt to income ratio cannot exceed 45%, and her ratios were over the 45%, and I'm like, oh my God, I really want to get her this extra money. Like, what can we do? She was getting assistance from the seller, and she's getting 100% financing. So it was just a small amount that she would need to bring personally. But I really wanted to get her the extra money. In the end, I didn't succeed because the ratios just would not work. So I just switched her to a regular VA loan, 100% finance. The seller is giving her some closing costs. And so in the end, she probably only need $1,000, which is her binder deposit anyway. So it still works. So if we start off on one course and it's not going to work, something happened to derail us, we are going to find another way, right? There's got to be another way. So let's just give us a call. Give me a call once again at 904-993-9895. Let me take a look at your situation. Then let's get the ROC team. Once I have that
Rock your
pre-approval,
world.
to go out and just get you that home and just make it happen. And I mean, we have plenty of times, guys, we're just in August, so you can be in your home before Christmas.
not even Christmas, before Thanksgiving.
Thanksgiving. There you go.
Yeah,
There you
before
go.
Thanksgiving, we can come to your house, eat that Thanksgiving dinner with you. Never know. Let me ask you a question now. So now we don't have a lot of time left. Can you give us all of the documents you're gonna need for, regardless of the program the person is gonna need, gonna be applied for? Give us a down of all of the document you need for you to give that person a pre-approval.
Okay, awesome. So we always need your pay stubs. We need 30 days worth. So if you get paid weekly, I need the last 4. If you get paid monthly, 1. Get paid bi-weekly, the last 2. Then I need your W-2s, 2018, 2019.
sometime we need the 2017 if you're going to apply for the bond program too, right?
Well, that's the tax returns.
Yeah,
tax
tax
returns on
returns,
my
you see?
bond program, I need 17, 18, and 19. So those are really what I need to calculate your income, make sure that, you qualify. And then, of course, we need your bank statements, right? I need the last 2 months bank statement. If you are self-employed, I need your tax returns, right? The last 2 years. And we're already halfway through 2020. So I need your a year-to-date
Profit and loss
statement. So people kind of freak out when they hear they have to provide a profit and loss. It doesn't need to be audited. It's something you can do. It's really simple. If you're working with me, I'll walk you through it. Really, really simple. Nothing to be scared of.
I mean, if you're working with us, we can just shoot you the it's simple of them. You just follow the simple
Right,
and then
just
send
fill
it.
it
It's not
out,
something that need to be done with your accounting, stuff like that. We just send you a form
Right.
and then you fill out the form and then we'll go from there. So those are the documents you need from the get-go for you to even start with the program. Because the thing I like about Sophia, when you send Sophia a customer, even though she pull out the credit and then take the information from that person, she doesn't just give you a pre-approved pre-qualification. She want to see those information, because I like lender like that. Lender is not going to shoot out, you call a 1-800 number, they give you a pre-approval based on the information you have. And then me as a realtor, I start looking for houses and then put you under contract. When you finally send the document, oops, you're not qualified.
It's a matter of diligence.
Yes,
Yes.
you definitely have to.
So
Joanne.
what I like about Sophia, she does a due diligence before she even send you that pre-approval. When she send you the pre-approval, guess what?
It's solid.
It's solid. You
Like
go
a
into the
rock.
closing table. When she send me that pre-approval, guess what? I'm going to the closing table. I start counting my chin because I know Sophia give it to me, and then it's the bank. I can take that and put it to the bank because that's the way she works. And then as a real estate agent, we like that.
Yeah,
we
I think most people don't like false hope and false promises.
I don't like false hope or false promises.
I don't either. But sometimes, I dealt with people that would rather just hear for that moment, but you got to give them the truth. You got to give them, and that's, Sophia will give them that truth. As hard as and bitter pill it might be to swallow, you got to tell them the truth, right?
And then the only thing, when you work with us and then you choose one of our preferred lender to work with, we do something we call, we put you in a group messages. When I say group messages, that would be me, the lender, and the Team ROC, and the title company. Everybody is in that group text. And then we put you also in a group email so you know what's going on. The great thing I like about Sophia, her Guild Mortgage as well, they send you a review of everything that's going on with your loan. They send you something, say, appraisal was ordered, this was done, this, at least you know the point of where your loan is. We
keep you in the loop.
You keep you on the loop. We all in the loop to know exactly. When we see that clear to close, that's the time we make the Holy Ghost dance. I know if you know what the Holy Ghost dance is. That's the time we start doing the Holy Ghost dance, because now you're going to sign your paper to be in your home. We don't have a lot of time. We're going to let Sophia talk a little bit about refinancing, because that's her show. She need people who already have their home, who want to refinance, the qualification you need for her to help you with because she does that too. So let's.
I had one more question before we go into refinancing. I'm sorry, but while we were talking about documentation and all the items that are required, there's a saying that I think I've heard you say is that if you don't tell Uncle Sam about the income when it comes to income and so forth.
Yeah, especially for people who are self-employed, right? So we see that a lot. Someone who is self-employed, they're trying to minimize their tax liability. I mean, I get it, right? I would too. But when it comes to the mortgages, whatever you tell the government you make, that's what we're using to qualify you. So if you did $100,000 in business and you said, I have $70,000, $80,000 in expenses, you only make $20,000. So now we're only going to use $20,000 to qualify you for a mortgage. You could have situations where it's a joint applicant. One person is W-2, the other person self-employed. They write everything off, and then now instead of them making a profit, there's a loss. So now you're just reducing the income of the person who is W-2. So if that person made 50, you had a loss for 5,000. Now we're at 45,000. So
that's the thing. When you go, we're not tax preparer. We don't know anything about taxes. When you're gonna buy a house, you need to let your tax person know how to do. I'm about to buy a house, and then I want to be qualified for X amount of dollar. So I want you to show that I'm making that type of money for me to be able to buy. You need to sit down and talk with your CPA professional to tell you exactly what road to go when you're in the middle to purchase your home.
Absolutely.
So, go ahead, Sophia. Tell us a little bit about, because I know you do refinance.
Yes. So refinance, if you are out there, you have a high interest rates. We know rates are extremely low. I don't know if we'll ever see these rates again in our lifetime. So if you have high interest rates, you want to see if refinance is beneficial. If it would make sense, then once again, please give me a call. Let's talk about it. Look and just see if there are any benefits for you to actually refinance.
What is a refinance?
Well, it's where you have a mortgage. You have an existing mortgage. Your interest rate might be in the 5s. And now, we see all these ads, saying rates are low. It's in the 2s, it's in the 3s, whatever. So at the end of the day, you're going to be saving some money by redoing the loan, right? So you can either refinance back into a 30-year if you have a 30-year. Some people that I've been talking to, they're refinancing into 15 years or 20 years or 25 years because they don't want to reset that clock. So that is something that you might want to take a look at, and just let me know.
Yes. Refinance is a great way to go. I'm not alone. I'm letting her do hers. I see people have 7% interest rate. Yes.
No
oh my
way.
God. I was talking to that guy. He got a 7% interest rate. I said, oh my God, that hurt me by just looking at it. And then he's currently in refinancing his house, and I think he's going to be very low. And then he was so happy to see that. Give me an example. I want an example because I'm very visionary, and I know a lot of people like me was listening and to us. Let's say that my mortgage is $1,700 a month, and then I have a 6% interest rate. You don't have to give me the exact
She's
number.
asking me no hard questions, because now I'm going to need a calculator, and I need to know all these, what's the balance and all that. Don't give me no hard questions. Don't give me no hard questions.
Guess what? Her cell phone got calculator on it, guys.
It's not the right time.
You don't have to give us a number. I want the people to know what is a refinance. That's the reason we're bringing that to the table. So let's say that my mortgage is $1,700 a month, and I have a 6% interest rate. Give me a number. If I refinance and I got into 3%, just give me a number how much I will be saving. That it doesn't have to be exact, just something to make them see that how much money they're gonna be saving if they decided to refinance.
All right. So to actually get that number, I really would have to put that on a calculator and kind of figure that out. But at the end of the day, when you refinance, you want to save some money. You're saving whether you're going to a 15 or you're redoing to a 30 or 25. But your monthly payment is going to either be going down. And so what you want to look at, because there are closing costs associated with the refinance, you want to look to see how long is it going to take you to recoup the cost to refinance. And then thereafter, it's just going to be all gravy. So as long as it makes sense, then yes. I'm doing a refinance right now for my friend. She went from a 30-year to a 15-year. She's going to pay about $600 more. But in the long run, which is what she's looking at, in the long run, she's going to save thousands of dollars in interest because she's cutting, she just had the loan now about a year. So she's cutting 14 years off her mortgage. So once again, it's kind of personal. It just depends on what your goals and your objectives are.
And then you don't have to just refinance to lower your interest rate. You can refinance to get some renovation in your house, to take cash out, to have a new roof. There's a lot of reason you can do refinancing. I want you to understand not everybody's situation are the same. And I do know that I put her on a spot by asking for a number. And
I
she
wanted to
knows
hear
it.
about $500 a month saved.
But let me give you an example for myself. We don't have a lot of time left. I know that it is somebody I helped buy a house last year. Her mortgage was in the 2000. She have a very high interest rate. She refinanced now. Her mortgage went down to $1,600 a month. She said $400, and I don't know any detail about that. That was what she wanted because the mortgage was way too high for her. Of
course.
So, and then we see other people refinancing as well. They want to take that money to buy a second home, to remodeling the house, whatever the situation is. I am not an expert on that. So, Sophia is, you can always call her. So she will give you the best way to go. So we don't have a lot of time left. We're just going to tell you guys how to reach out to us. Sophia, tell us exactly how we can reach out to you.
All right. So once again, you can call me at 904-993-9895. If you are ready to apply, go to applywithsophiaph.com.
Great. What about you, David? Do you have anything to say?
Okay, so look, as far as reaching out to us, you can reach out to us here at Team ROC, not just by the telephone number that Ella's going to give you, but you can reach us on Facebook. You can also reach us on the internet. Send us an email at Team ROC Real Ownership Connection. So that's TEAMROCFL@gmail.com. And that email will get to us. But please also like us on Facebook, like us on our YouTube channel. We're putting up these audio recordings, so if you're not listening on a Saturday morning, you may go in and check us out in full on our YouTube channel. So
subscribe to our YouTube channel when we have new thing posted,
Please
so
do.
you can see what's going on, because we're working very hard to get you that information. When you decided to buy your home, you already very knowledgeable in what's going on in the process, so you become a master at it like us. You can reach us at 904-385-9169, 904-385-9169. That was Ella Marie Jean-Baptiste coming to you guys. And unfortunately, Miss Joanne Beepot is not here, but I'm quite sure she's listening to us. And we cannot wait to see her smiley face coming back to us next Saturday. So we cannot wait to see you, Joanne. We miss you a lot in the station. Please come back. We need that. We need you. We need your voice.
Yes,
Please come back. So
She'll be here.
until Saturday, she will be here with
Tune
us
in.
next
She will be
Saturday.
here.
She will be here next week. We're going to have a different lender coming to us, coming to you guys to explain to you what's going on. It's going to be Mr. Timothy Pickups. Is going to be there. Again, I don't pronounce people's name right. That's my thing. So I'm going to say that. So Timothy going to be there with us guys to tell you a little bit about what he has to do. And the following Saturday, we're going to have a brand new builder to come. So we got information to you guys. That was Ella Marie Jean-Baptiste coming to you guys all the way from Residential Movement Real Estate Group, which our managing broker is Mr. Kennard Thomas, wonderful guy. And again, guys, we are Team ROC, the team that gets you to the closing table. Until next time, we have a good day. Thank you very much, guys. Remember to contact us, guys. Our phone number, Team ROC number is 904-385-9169. What's your phone number, Sophia?
Yeah, my phone number, once again, is 904-993-9895. Apply with Sophia.com.
thank you so much for listening, and we will see you next week.
Are you thinking about buying or selling a home in Florida? Whether you're considering your first home, relocating, downsizing, upsizing, moving out, moving on, or planning to acquire an income-producing property as an investment, Team ROC of Residential Movement Group is your real ownership connection. They are Florida Realtors, Joanne Beepot, David Ham, and Ella Marie Jean-Baptiste. For rock-solid professionalism and expertise in all aspects of real estate transactions, lean on Team ROC to help you accomplish all of your real estate goals. Contact Team ROC at 904-385-9169, offering you service in English, Spanish, Portuguese, French, and Haitian Creole at 904-385-9169. Also listen to Team ROC here on the ROC Real Estate Radio Show every Saturday morning from 10 to 11 a.m.